Okay, so on to something that I've been looking at this week then. So, Wakasuma, in the comments last week, asked a question probably aimed at me, which was, can you elaborate a little, he wrote more clearly than I said, on why you think stock-based compensation is a genuine cost. And I like this question because I said last week that, look, I thought Meta's stock-based comp was slightly worrying. And the reason I worried about it was because I thought it was cutting into free cash flow, and I view that as a genuine cost. Not everybody does, because it isn't a cash charge. And I like this question because it encouraged me to think a bit more clearly about exactly what I have in mind here. And that's been one of the things, actually, over the however many episodes we've done. We must be closing in on 100 here, Steve.
Yeah.
One of the things that I've really benefited from in talking to Paul and Steve and Zach back in the day and thinking about people's questions is really getting clear on how I think about things and being able to explain them in a way that makes at least some vague semblance of sense rather than brushing over it in my own head. So here's a little bit of elaboration then on why I think stock-based comp is a genuine cost. Over the last 12 months, Meta Platforms has bought back around $41 billion in its own stock, which at today's share prices and today's market cap is about 14% of the business. They now have a market cap of about 300 or so from what I can see of it. So if I owned 1%, I could sell 14% of that investment if they did it again and still own 1% of the business. So that's what you get instead of a dividend of a sort. You realise that kind of gain by selling your shares at whatever the day's prices are. Stock-based comp at the level of about 11.3 billion or so means that just over 25% of what Meta is spending buying back is getting spent on undoing this dilution effect that they've had by giving away that many shares. So they're printing 11.3 billion, buying back 41, and that would be nice. I'd like to get 41 billion bought back, but I'm not getting that. I'm getting a total of 41 billion bought back, take off 11.3, because that's just undoing the effect of the stuff that they've already printed, which means that the amount I can sell and still keep my investment at the same level is around 10% or so. That got me looking a bit more closely at Meta Platforms and how much stock-based comp it incurs expense-wise, because I thought it looked like quite a lot. So I had a bit of a comparison using a nice chart that Steve sent me earlier this week. He was looking at a bunch of companies and how much of their revenue effectively goes back out the door again on stock-based compensation. And the amount for Meta is about just under 10%, 9.6% was what I saw as a percentage of revenue for stock-based comp. That's quite significantly higher than Google at 6.5%, Amazon at 3.5%, Apple at 2 1/3, Netflix at 1.5%, Microsoft at just under 4%. So compared to the kind of other big FANG or FANG-alike stocks, that's quite high from what I saw of it. It's actually comparable to something like Shopify, which is at 9.68%, Meta at 9.64%. So what I was looking at there is a company, I guess, that is sending out stock-based comp like it's in big growth mode, which is what Shopify is, but based on its most recent earnings, isn't in big growth mode. Its earnings slipped back a bit. Steve, what do you think about any of this?
Particularly interesting, really. I think, jumping forward to probably something you've got later on is the layoffs coming. Obviously, are going to address some of this issue, but I guess we should spend a little bit of time just looking at how comprehensive this package is that Zuckerberg's put off. I mean, if you, from what Steve said, he obviously cares about his employees. Especially from a compensation package, but in terms of their actual severance as well, it's really is generous. They're getting 16 weeks of pay, plus 2 additional weeks for every year of service that they've had at Meta. Meta are also going to cover the health insurance for 6 months. They're also putting on a independent careers service to help people get re-employed, and they're also helping with any immigration issues as well. They're going to put up the money to do that. So, in terms of what Facebook Meta are doing, it is very generous, and I guess it'll be it won't be well received, but I guess it will be well received in the future when people realise just what they're doing. But yeah, in terms of the graph was a really interesting thing that I spotted last week. There's a hell of a lot of interesting companies in there. I mean, we like under 20% of revenue paid to stock-based compensation on a fast-growing company. There's a few companies that are very tight to that kind of line, but there's a few really, really big outliers, looking particularly at Palantir, Snowflake, Splunk, those kind of companies, Autodesk, Zoom was another that likes a bit of stock-based compensation. So that they were particularly shocking to me. But I didn't realise Meta was as bad as you said it was, Steve. So what do you think? What do you think is driving that desire to give away so much company?
I think it's just a kind of added metaverse expense here. I mean, the way Zuck thinks about this, or at least until this week, I should say, he appeared to see this as still in growth mode, basically. We're going all out to try and buy every metaverse company we can find and hire a bunch of engineers to go and build this out for us. And I guess that's where stock-based comp came from. I mean, as with dilution and printing shares and taking on debt, you and I have always said, look, a rising share count isn't in and of itself a problem. If you can grow your revenues faster than you can, and significantly faster, let's say, than you increase your share count, fair enough. We would think that's the right thing for you to do in this situation. You would want bigger revenues if you couldn't have achieved them otherwise, in exchange for slightly more shares. A couple of things about Meta there, I guess, though. One is it is buying back the shares, so the share count isn't going up, but it is having to pay to do so out of its free cash. And the other thing is it doesn't seem to be in kind of massive hyper growth mode just at the moment. I mean, it's putting up comparable numbers to something like a Shopify, but it's not obvious to me that it is. And the way, of course, one way you can correct your kind of out of control stock-based comp is by reducing the size of your workforce and therefore presumably bringing down the number of people you're paying out shares to one way or another.
Yeah, and that makes perfect sense, doesn't it? I guess I read in the letter Zuckerberg was quite apologetic, really, for his lack of foresight in terms of the other businesses. I think he thought that Meta and the family of apps were just going to skyrocket off. They'd had this phenomenal bit of growth over COVID, and it seemed like he really thought that was going to increase and carry on, and he hired like it was going to increase and carry on, which I guess is part of the problem. I do wonder how much this layoff is going to. I think it's just over 11,000 people who are getting laid off. I wonder how many of these are people who are relatively new to the business, or hired in the last couple of years. But do you see growth returning to Meta? Is that part of the thesis of why you own it, Steve, or is this, Meta, you just see them about realizing what they already have?
I would like to see them realizing what they already have. When I kind of first bought them, it was a stage where this metaverse stuff was starting to become a noticeable drain on, well, mostly net income and also to an extent free cash flow. And my thought at the time was that this isn't something that Meta can just kind of shutter in an important way. It would now be the case if they shuttered it that it would involve drawing a line under quite a lot of losses. But I think investors would take that, to be honest. I think if they shuttered it, they would take that as, okay, good, there's no more coming, in a certain sense. But I'm not sure that I now see this in the way that I used to. I used to see this as the thing that Meta has no choice about. They need their platforms to be important on whatever comes after the smartphone. They managed to transition from effectively PCs to phones pretty well seamlessly. Facebook got itself onto basically every phone that was around, every smartphone anyway. Instagram similar, WhatsApp probably similar too. But if we move off of phones and into whatever the next thing is, will Meta's family of apps platform still be relevant there? And I saw the metaverse as effectively a way of playing to ensure that they were. But I'm not sure that's really necessary here. I mean, they managed to transition from PCs to phones, but they haven't really managed to build a phone, or not a very good one anyway. I think they may have tried to build a phone at one stage, but clearly that was not a successful effort. But that didn't particularly slow them down. They did very well. There's clashing with Apple and so on, and they're at the whims of them a little bit. But nonetheless, they have a big kind of advertising base. They have a lot of users. They will be an attractive proposition to advertisers when advertising budgets recover, from what I can see of it. I'm kind of starting to see this in the way that that other people saw it before, ahead of me a little bit, on the metaverse as a kind of unnecessary, unfortunate expense.
Yeah, and it could be, and it could be that it all works out and Zuckerberg goes back to being like everybody's hero. I guess is a key thing. You've also got to think they've never really figured out how to monetize WhatsApp properly, and if they could get to monetize WhatsApp anything like they've managed to monetize the other things in the family of apps, and that is a really, really big growth driver for Meta. It's one of the things I've never really understood, why why you would go like so far deep into the Reality Labs without really figuring out what you're supposed to be doing with WhatsApp. I think if you could get WhatsApp to generate some more money, that's, the cash that you would be losing on Reality Labs would become more insignificant, or Zuckerberg would spend double what he was currently spending. But I have the same problem with Meta that I had last week. You would be surprised to hear I haven't got over it yet, is that I just feel like it's just so much money for so little output. I think it might be because I'm just not particularly interested in the stock or Facebook or any of the family of apps really, that I don't see it. But I just think 12 billion a year is a lot. I would expect to see so much more if my companies were spending that, and that remains my bugbear and probably will remain my bugbear. And if it comes off, that I'll just say that, look, I was completely blindsided by the just how bad everything looked, but I just don't see it.
Yeah, there's nothing the matter, for what it's worth, of something springs out of this that you didn't see coming and just saying you didn't see it coming. You don't have to pick every winner in the stock market here. And I'm not saying this will be the kind of big winner, but even if it is, I don't think there's anything kind of disreputable about saying, look, the metaverse stuff kind of caught us by surprise, because Facebook, Meta, any of them, have never been that transparent about what's going on in here. Aisha Investor put in the comments last week, I think, and it's the right point, so I'm assuming he put it, because his comments are usually pretty good on this sort of thing. Or in general, actually, about investing, that the problem people have is that the losses on Reality Labs aren't particularly transparent. They don't guide very well on this, or say, look, here's what's going on, here's what we need to do, and here's what it's going to look like when we get there. What we get is some fairly horrific-looking pictures of what the metaverse might look like, and that makes it hard for anyone to really get behind. I sort of increasingly see the metaverse as a kind of COVID dream. So there was that time, right, when Cathie Woodstocks were all going mad and people were never, ever going to go to an office again, and all that kind of thing, which has turned out to be massively overblown. The metaverse feels to me like something from that kind of era. And I'm not saying the world hasn't changed at all since COVID. It obviously has. There's bits that will stick with us and so on. But the idea that everything was going to be never the same again, that seems to have gone away a bit, and I worry the metaverse has gone with it. Sorry, back to you.
I'm just thinking, do you think the main problem with the metaverse maybe just is Zuckerberg himself? I mean, he has the charisma of like C-3PO painted skin colour, doesn't he? So he's not the greatest salesman in the world. I wonder if somebody like Steve Jobs was up there showing us his metaverse and it was exactly the same, if we'd been more wowed by the output. I wonder if it is Zuckerberg. Two things. I think he's quite generally disliked as a person anyway, outside of the investing realm, I guess. So that opens him up to ridicule whenever he seems to be failing, I guess, is what I would put it under. When people love it when somebody they don't like is not doing very well, don't they? They love that. But I wonder if it's his complete lack of charisma that is not selling the metaverse to us, that we can't see his dream of it is obviously very clear, and I don't know if we can see it, and I think that might be down to his ability to show us.
He does look like something that belongs in a metaverse, doesn't he? He looks like a kind of borderline sort of human. He looks like the humanoid robot that Elon Musk is trying to invent, for what it's worth. And I sort of don't know. It's a really interesting thought experiment. That what if, say, not even Steve Jobs, but just say Apple came out with a metaverse thing. Apple, which has a really, really strong customer base and following, and they've persuaded people to. I mean, they not only persuaded some people to buy iPads, for which, when I saw that product for the first time, I thought it looked ridiculous. I thought it looked like a basically unhandy, awkward-sized phone that didn't have a USB port, from what I can remember of it. You couldn't print things from it. But for some reason, iPads, or more generally tablets, appear to be everywhere at the moment, and I couldn't work out why, and I now absolutely get it. So I wonder whether, if Apple brought out a kind of metaverse thing, would I look at it and go, what in the hell is this? And then everyone would be all over it immediately. Maybe.
And that's the thing, though, with the Apple products, is that they got them into your hand, didn't they? They had Apple shops that you could go in, and that might be the issue with. Paul says he's had the Quest headset on, the Oculus headset on, and he gets it. And me and you, I've tried it. I played mini golf on it, which was great. But it's more price prohibitive, isn't it? I think is the thing is that with a phone, if you buy an Apple iPhone, you'd be thinking, well, even if I don't really like the phone, I'm going to get a couple of years use out of this before I need a new phone. But with this Oculus thing, you don't want to be spending 300, 400, 500, 600 quid on the thing and it's sitting on the shelf gathering dust. So that might be the issue. It might be that we can't see, he can't demonstrate his vision to us, and we don't have the opportunity to go and experience it for ourselves. So that might be where we're falling short.